You guys are going to hear a somewhat similar story to this. The Osisko Group came into this story in 2015. The asset had a tainted history. I'm sure some of you people had met the previous management. And we pride ourselves on looking at, distressed assets that are in district-sized land packages that are relatively clean. And when we came into the story, sitting around $25 million market cap, no cash in the bank, and in a world-class camp that was, held by one company. When we looked at it and said, geez, there's gold everywhere. We just don't know what's controlling all this mineralization. So we put some money in and kind of got a grasp on what was controlling it. Then later in 2016, kind of jumped in with both feet, bought out Eric Sprott, and that's when we, cracked the controls on mineralization, and that's what's really driving this exploration story today. From all the companies you'll hear, this is probably kind of the most Explorco that we got in the portfolio right now. So I apologize that there's no PFS numbers and you guys can't go run your DCS when you go home and tell you that we're wrong. Your usual forward-looking statement. Like I mentioned to you guys, this is a district-sized land package. For some numbers, the Abitibi, the Timmins Belt, the Cadillac Break is about 70 kilometers, produce 120 million ounces of gold. This is 67 kilometers with historical production throughout the belt. It should be noted, this is the third largest placer district in North America. So after the 49er gold rush, they came up here and then went on to Klondike. The vast majority of the production is right in the Wells Camp, all hard rock replacement and vein style mineralization. But the big thing is that this land package was so fragmented, it was held by 86 different landholders. So no one could kind of step back and do scientific and systematic exploration to develop a genetic model that is predictable across the district. And as Sean likes to say is, it's the SUDS program, shut up and drill stupid, but in order to create real value for you, is that we need to know where the hell to drill. And if you don't understand that, you're burning shareholder value. So in late 2016, we cracked that code and are on the way to unlock the largest gold camp in British Columbia. The camp was founded in 1858, like I mentioned, and then production started in 33, intermittently closed during the war, and then opened up again in 67, and basically hasn't been in production since. One thing we did inherit when we took this project over, and it's something vital to our success as a mining company, is that we inherited a mill, which is 110 kilometers away, and inherited a mining permit. That allows us to do some test mining to add to the robustness of our feasibility study. We don't do PEAs. We find them very misleading. You're lucky to get within 50% of what the PEA says. So that's why we'll go straight to feasibility. And the test mine allows us to add to the robustness of that, okay? Quick share structure. Like I said, we took this over at $25 million market cap. We're sitting at about $190 today, $33 million in the bank. The other thing we had to do is reorganize the share structure. So as you'll see from a lot of the companies tonight, it's pretty much the same ownership that follows the whole group around with, Osisko Gold Royalties at 33, OSK at 16, JP Morgan at 5, Century, Tocqueville, and Oppenheimer, which is Massachusetts Mutual. Like you guys, some of you know, we did inherit our resource. It was the first time in history I can actually say we took off 5 million ounces off the board and our stock price went up. We couldn't back that. None of the data was justifiable. We went in with our technical team, which is the Talisker Group, which is run by our president and CEO, Chris Loader, and put together a model that, like I said, was predictable, and we could put the Osisko stamp behind that. That was released in May this year. It's an underground resource, 3.8 million ounces at 6 grams diluted. I just want to go over it. What we do here is we mine vein corridors. We don't mine individual veins like they did in the past. So we dilute it over minimum width. So these red vein corridors, you can think about them as a stope or a panel. They have about an average width of 4.5 meters, a strike of 250 to 300, and are completely open along depth. And that's what I want you guys to really understand, is that how we're going to create value for you today is that these are mesothermal veins, very similar to what you see in the Abitibi. So they do have great depth extent. They're not what you see in an epithermal vein where they're zoned. So the grade is very homogeneous throughout the chutes. So if we just take this all to 450, which is at the shaft zone, you're basically looking at about 8.5 to 10 million ounces on the board, with only in that 6 kilometers of the 67-kilometer belt. And that's the other take home, is that this isn't just, we're not just developing Cowan Island and Barkerville. We're developing a district here in a real mining camp that's going to be a multi-life cycle project. Then we could see producing north of 200,000 ounces a year, like you've heard from most people. But the beauty and the optionality about this project is that we can have a staged production approach, de-risk it using the QR mill with a lower CapEx build, and then as we drill off the rest to 800 meters and see this thing going north of 10 million ounces, the optionality in each vein corridor can really push the throughput, north of 4,000, 5,000 ton per day, okay? Quick little summary on what's really gonna come. Like we said, we're always gonna be advancing our greenfields pipeline to develop the next project. We're gonna have an updated resource with an additional 105,000 meters coming in Q1. We're gonna complete the feasibility study in Q2, like I mentioned. This is a brownfields camp, just taking a new look at it. So there's a lot of historical data. All the metallurgical work is already done, met work's done, and all that sort of stuff. And continued production and test mining from Bonanza Ledge, which generates some cash flow, does about $1 million a month, and just maintains the permit and trains a local force for the larger project. Quick board. I'm sure you guys don't know this person, but Anthony McCooch, John Brzezinski, Chris Loader was one of the probably the most successful explorationists of his time. His team Talisker has basically been the technical side for OR. They pretty much have 28 million ounces of greenfields discoveries under their belt. Tom Obradovich was Aurelian, Andre St. Germain's a dependent, and Morris Pachitny's with Nighthawk and Northfield, and the rest are just lawyers. So, just costs a lot of money. That's all we got. Thanks, guys.